if you see the chart, it's still in the descending channel. So
I didn't know you were a technical trader though, but okay.
That's how I pretend, like how you pretend master. I pretend I'm a trader guy.
Welcome back to episode 2 of the Backholder Pod. So I think this week specifically, it has been a rather interesting week because many of our portfolio companies actually just recently reported earnings. So personally for me, I think you guys should know by now, I'm a huge China bull. So I'm personally vested in both Alibaba and Tencent. So for Bunti, he also have a Tencent position, while Eric, on the other hand, he has a CE Limited position. So I think all three companies we will try to discuss in greater details in this specific episode. And I think for Kelvin, I think he's not invested in all three companies, so he'll be the one shooting all the questions if he has any, especially for those of you who are not invested in those companies as well. So I think to just kickstart the discussion, I'll just provide maybe just a broad overview of both Tencent and Alibaba's earnings. So I have a caveat first because I've been quite busy over the last 2 days, so I haven't really sit into the earnings call. Most of the numbers, I basically just look at the presentation and I jotted down some notes. So it probably wouldn't be as detailed. If you all want a detailed breakdown, you can watch the video that I'll be posting on my own channel. Just a shameless plug. But anyway, I think for Tencent, a very interesting discussion then was that they started issuing Meituan shares as some sort of a special dividend. So for every 10 Tencent Hong Kong shares, they're going to give one Meituan share. So if you have to crunch the numbers, I think it's around a 5.3% dividend yield. Based on the closing price yesterday. So I think in today's Hong Kong market, all China stocks are in the green because of yesterday's rally. I think it has been quite an interesting rally. Personally, when I look at the results, I thought it was quite meh. It was not spectacular, but I guess when expectations are quite low, they came in kind of beating bottom line. I think for Alibaba, they missed top line. But like I said, if expectations are low, then if it's a beat, then everybody probably lost their beliefs in China. So it was an easy beat. Now, I think moving on to Alibaba, results were also pretty meh. I honestly have not much comments. I think China commerce continues to deteriorate. International commerce, somebody probably need to wake up because if I were to compare it to Shopee, it hasn't been doing very well. I think you can have a further discussion later with Eric on C's growth in the e-commerce market. But I think one interesting thing was, or at least I think one of the driving force was when they announced the share buyback program. So at least for the share buyback program, they did say that they already purchased 18B out of the pre-approved 25B. And after this recent earnings, they are going to approve another 15B. So that's actually a total of 22 billion in terms of buyback. So looking at a $200 billion market cap, that's around 11% yield over the next 10 quarters because this is until Q1 of 2023. So on top of that, if you were to do just crunch numbers, right, that's essentially an additional 4.4% yield per year for the next 2 years. So that's actually, I think, what pushed the stock price up. Because if you look at it, Tencent is giving out special dividends. Alibaba is just buying back shares. So they're basically just spraying money on shareholders at this point in time. But I guess a lot of people probably still have PTSD around Chinese companies. So yeah, I think those are the main gist and my understanding of the market reaction to the Chinese stocks. Maybe I'll just pass it over to Bunti because I believe you also saw Tencent's earning as a Tencent shareholder. You have any thoughts or anything about it?
I actually haven't read into the details. I mean, just the headlines. That's it, right? So no detail analysis from my side. The one thing that I think is interesting is on the payout of the Meituan shares, because this is not the first time they did it. I think the previous round they did it was with JD. So very interesting. They didn't dump the shares on the market and get the cash and just distribute the cash, right? Which is easier for the shareholders. They make it so hard that they pay out in shares. For example, if you own 100 shares of Tencent, now you distributed let's say like 10 shares, or 10 shares is actually odd lot, and I hate it. I hate it very much, and it's very difficult. You have only a specific period for you to call the brokers and sell those odd lot. I really hate that. Yeah.
My question is, why are they distributing Meituan shares?
Yeah, good question. I think this one, they explain a bit. For example, they said they only distribute business that are already matured, that is at a strong footing. So I think they try to slim down themselves now, because right now for Tencent business is like there are two parts, right? One is their core business. So these are like the WeChat, their gaming business and so on. But they have a huge investment portfolios, which also include Tesla as well. C Limited also in there. JD used to be in there. They already distribute out. So yeah, for this round is Meituan lah, which they invested for quite some time.
I think maybe also to add, right? I think the discussion was really, so Tencent's business, the investment portfolio, a lot of investors are concerned. Does it mean, as in, was it a direct order from CCP saying that, hey, you guys should divest everything and y'all cannot have, or y'all cannot basically run a monopoly in so many of all these different industries, especially the internet industry. So personally, I'm not that concerned as of now. But yeah, I just to provide some color, maybe sooner or later they'll start distributing Tesla shares as well. Who knows? But yeah, they do have a small percentage ownership in Tesla. So back to the discussion where Bunti was talking about basically saying the trade-off of whether you should sell or whether you should distribute. I think they should distribute instead of selling, because for selling wise, it's gonna they actually hold quite a big percentage. It's I think 20% of Meituan share. So if they're gonna offload the whole 20% ownership of Meituan, I think you as a Meituan shareholder, because I don't own Meituan, so you as a Meituan shareholder, it's gonna tank. So as we know, yesterday when the market opened in Hong Kong, Meituan tanked because everybody is just front running the selling pressure. But I think from the perspective of Tencent is basically saying that, hey, I made a very good investment over the years. It has appreciated in value. I'm going to give it out to the shareholders. You guys do what you want to do. So you want to be a shareholder in that investee company, or you want to sell it away, get it in cash, that's up to you. But at least from that perspective, I think it's a pretty good, I mean, I would prefer that they give it out rather than sell it into the open market.
I have two things to say about this. The situation where this Tencent big companies owning another big companies, which is Meituan, in like a huge proportion. There are two problems, right? The first one is that this kind of relationship when they own a big stake and then sometimes they sit on the board. So it becomes like a cartel, So they have some partnership in terms of how their business is run. And then, for example, Meituan, there's a mini app on Tencent, WeChat ecosystem, and so on. So there's all this collaboration, and then they will try to help out each other and basically make it very hard for the other smaller companies to compete with all these giants, right? So I think this is one thing that maybe there's some pressure from the government to say, okay, you need to like stop doing all this already. Then secondly, right, I think because, when Tencent, they own Meituan, because Meituan is so big, right? And Tencent themselves, after you own the shares of Meituan, you also become very big. Basically, if you look at the market cap, right, it's like almost double count kind of situations. So I think maybe for that reason also they want to say, okay, we shouldn't do this anymore. We need to like dispose it off. And then basically Meituan, the share price will drop because of these selling pressures. And then Tencent also, because they liquidated Meituan's, right? Their size will also shrink. So I think all this will actually make all these big giants become somewhat smaller, which is good for competitions. I mean, when raising for capital, they are smaller. So I think that's the direction that they are going, which is according to the governments. So that's my take on that. I want to ask Eric questions, because you remember they right now they actually own C, right? And in the past they actually sold a small portion. So I'm just curious, do you think that they will sell C Limited because given that they already sold a portion before at much higher price, because right now the price is a lot lower, right? What's your take on this?
Actually, I have no idea when they are going to sell it. And I also don't see, like, I think mostly they sell it, I have the feeling is that because the CCP doesn't want them to like have so many things, have so much influence. That's why they want them to like slim down, keep to their core business. I feel that somewhat there's a little bit of a pressure to divest their non-core business, rather than you say whether they are mature or not. It's really up to interpretation, right? How do you tell when something is mature? Like when it's world number one? I don't think Meituan is really like at the world number one kind of place, right? So in that sense, if you're saying selling mature companies, I don't think C is very mature. To me, it's still very immature because its price is not it's not been going up too much. But recently the earning was quite okay. Yeah. So That's my take.
Maybe then we shift over to C, right? When you talked about earnings, okay, what's your thoughts on the cash burn situation, and why did the market rally 30%? That's what I don't understand.
Wow, Chicken, you're in the know, man. I think the most raw nerve for C Limited is the cash burn rate, because they are not profitable, right? And then all these fat interests start coming in. So I think what makes investors so happy is that their cash burn rate actually slowed down quite significantly. Despite the fact that their gaming sector, I think, is really not looking very good. It's a slow grind down. Quarter on quarter is down 8%. So it's not really that great. E-commerce holding steady, up like maybe 1-2%. C Money is the star still. It's up like quarter on quarter about 20%. Last time used to be 100%, 50%, all that kind of thing. Now it's like 20%. It's not too bad. As a group, right, they are actually cutting down on all the expenses, as you can see. But the main concern for me, right, as a shareholder, I see their stock-based compensation is still trending up. It's still relatively high in my opinion. So they're still really burning quite a lot of money to keep those talents. Yeah, so have to look and see. I think they promise, not promise, they aim, target to be profitable by end of next year. So we'll see We'll see whether can they do it.
Yeah, how do they intend to turn around?
They actually improve their monetization. I think their margin wise also up a little bit. Because all these not profitable companies, right? They have all the cost of revenue, sales and marketing, admin costs, research and development. Actually, all these are still going up. Out of these 4 categories, right? The only one that's down is the advertising and marketing. So they cut down a bit on that. Then everything else is still going up. But despite that being the case, right, they still managed to cut their free cash flow burn by about 40-50%. So looking at their cash, right, their free cash, available cash, I think they still have like about $7-something billion cash, right, which they raised just before this whole tech start to go down, right? So now they are burning about 500 million per quarter. So if you calculate, right, they can still last about 7 to 8 quarters at this cash burn rate. So hopefully, by the end of next year, pray to guanima.com that they will not burn more. Yeah, optimistic.
Wait, by turning profitable, you mean net profitable or adjusted EBITDA
net
profitable?
profit. Now they have only one division that's profitable. That's the gaming. C Money still burning. E-commerce still burning. But e-commerce is very big pie. So there's some markets, right? They are actually going to turn profitable already. But the Brazil one is like a big fire burner. It's like just shoveling the cash inside. But they are growing at like 200%. So I think if Brazil can turn profitable, what already? So just waiting for the South America to do their thing, because they are a huge market. Yeah,
I want to throw these questions to everyone, right? Because when we say C has been burning capital, what we mean is it's not all just corporate salary, this kind of expenditures, but it's more like they really subsidize their sellers, or they subsidize they give out coupons to the buyers and so on, just to help them grow the business, right? And I mean, let's say if we look at past 2 years, their growth rate is very high. And then now, because they already cut all this burning, and we can see that the growth has been slowing down a lot, right? So, and any concern with regards to their growth rate? Like, do you think that are they able to grow if they cut their all these coupons like significantly, or increase their take rate, which is that the commission that they take, right? If they increase that a lot, right, will all these seller buyer go to the other platforms or not? Just want to hear opinions from all.
I think at least in this environment, when reality sets in, you can see that everybody's tightening their belt. Across big tech companies as well. I think they've been on a big tech it's a hiring boom for many of all these like software engineers and stuff. So I think similarly for Tencent and Alibaba, they've been doing a lot of cost cutting. So some of them actually turn quite EBITDA profitable as well. One example is like Cainiao. So from that perspective, I think it's a macro condition that forces everybody to suddenly wake up and say that, hey, I think this is a little bit unsustainable. So let's all slow down a little bit and see how we can turn this around. But I think generally, at least if the market is not ready for you can do this kind of burn and just capture market share when we are probably in a bull market, meaning all the companies are very willing to spend. There's a huge TAM and the markets are largely untapped. That's when you can burn. But when everybody's tightening together, no matter how you burn, I think the ROI on your capital doesn't make sense as well. So that's also probably why they all started tightening. Then back to this C thing, right? Personally, I didn't make a public position because I didn't make a video on it, but I invested in Alibaba, which is the direct competitor to Shopee, which probably means that I'm less bullish, or I can say I'm more bearish on Shopee, right? I think at least in the e-commerce business in the Southeast Asia region, it's still quite commoditized. So people still go around and it's basically like Grab and Uber. It's a dumpster fire. So then they managed to gain a lot of market share. So that was my perspective. And Lazada has always been losing money, or at least the international commerce has always been losing money for Alibaba, and it's a very small percentage. So I've been seeing a lot of very heated debate on Twitter. At least people keep comparing Shopee with Lazada and Alibaba's international commerce arm, right? I also wanted to maybe ask like Eric, since he's in the space, right? Like, what's your expectations of the competition moving forward, since both of them are tightening from here?
Actually, personally, as a consumer, right, I have been buying on Lazada, because the C, right, the Shopee, their coupons start to dry up. They don't offer like a free delivery and all that for certain products. So I was a bit cheesed off now, like, no free delivery. So I had to spend $1.49. So I go over to Lazada, and then they got a lot of promos, a lot of vouchers and everything. So I started buying from there. And then recently I realized that my default go-to e-commerce app is Lazada instead of Shopee. So I just keep buying on Lazada.
But maybe I also want to understand, like, from Kelvin's perspective as a consumer, do you shop on Shopee, Lazada, or do you go Taobao?
For cheaper stuff that I don't need to get immediately, right, I will go to Alibaba.
Long Alibaba.
No, I didn't say that.
Yeah. And
but
then
if
for
I
the
need the
rest,
stuff urgently, then if I don't want China stuff, for example, like milk powder, I will get it from Shopee because it's locally. Not really locally, it's more like from New Zealand or something. But at least I know that it's not from China because I've heard horror stories from there. So it depends on what I'm buying. Like the electronic stuff from Alibaba can, baby stuff from Shopee lor. Yeah, but anyway, I like Shopee interface more than Lazada. I just want to mention about the Alibaba and Tencent thing, right? Why not? Like, it feels like they're acting as though it's already a mature company, not a growth company kind of stage already, because the growth has sort of slowed down. But it's probably because of macroeconomic factors, like all the recession and thing happening. So if there are good news coming out, like China reopening, even that whole US-China auditing, right? If it goes well, or like the whole recession sort of ends, then I believe that the selling pressure will go down, right? Unless there are more bad news coming out, like the China-Taiwan thing going on, then we will see more downside.
I actually share the same sentiments. Maybe I'll share screen for a while. So actually, if you have to really look at it, right, this is basically a very simple, like, kind of heat map on Alibaba's growth rate. So like Kelvin accurately pointed out, right, it was a growth company and then it transited to a value company. So if you actually extract, like, since 2019, the growth year on year has been quite monstrous, like 30% easy. This is an easy growth rate for them in 2019. Then you can see that it started slowing down. So 2020, they still hold 30%. And then that is when COVID kind of hit 2020. But China has been largely unaffected because of their zero COVID that was quite effective in terms of fighting the pandemic. But then after that, then you start adding in the tech crackdown, you add in the macroeconomic slowdown, you add in the perpetual lockdown and the supply chain disruption and inflation and yada yada yada, right? Then you can see that the growth rate, right, starts just crashing down. So after Q4 of 2021, this is actually March 2021, the growth rate just basically went bonkers. Sometimes it even go negative. I think it's also probably because of a high base effect, sorry. They did a crazy quarter in 2021. Then when you compare year on year, you get negative growth or even 3.2%. So yeah, this is just this is like this growth to value investor kind of transition is quite obvious also. I mean, in retrospect, it's quite obvious. But when it was collapsing down from 300 to 100, right? People was kind of like in the denial, capitulation, blah, 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 that phase. Based on the base effect, if they're just going to go 0%, or like low single digit growth rate, I don't want to say that, I don't want to call the bottom, but I think we are bottoming out already. I mean, not financial advice, but yeah.
Do you see like any further bad events happening to them? Like what can China do further to halve its price further?
I wouldn't say never, but if half its price means it's selling at cash. So, because now it's holding at around 30 to 40% of the market cap is in cash. So if you half from here, or let's say it goes straight at like $30 or something, as in at its bottom is 60, so if half again from there, that's a cash position. Then that one I'll start leveraging. But no, jokes aside, anyway, I think there are still a lot of considerations like you said, the China-Taiwan war and stuff. But moving on from here, it seems like the markets have been quite optimistic in terms of like upcoming stimulus, how they're going to support the property sector, how they're opening up from the zero COVID thing. So that's why I say I look at it and I see quite a lot of signs of bottoming out. But yeah, not financial advice. Don't touch China stocks.
Chiking, I want to ask you, right? You say that if they half, they'll go into like in cash position, right? I want to get your views on how that will compare to Nokia, right? Back in the day, they were collapsing when the smartphone came out. They have tons of cash also, right? So in the end, eventually, the business also, didn't do very well. They got bought over by Microsoft, at least the mobile phone. So I think, in your opinion, does net cash position actually mean anything if the business is going downhill? It's like rolling down a hill very fast. Even if you have a lot of cash, you probably can burn through that pretty fast also.
I think maybe short answer. Fundamentally, I think they're different businesses. It's still backed by 1.3 billion people on the app. You can look at the monthly active user, the engagement rate for both Tencent and Alibaba. Yes, I think they are posting like negative results for the last 2 or 3 quarters. But the negative is like -1, -2. We're not talking about like a -20, -30%. So Nvidia is at negative. I'm not going to flame anybody, but yeah, Nvidia is facing quite a lot of headwinds. We can go about it later. I think Intel also has been at -20%. So those are called rolling down the hill. But I think for now, at least for a lot of all these tech companies, if I superimpose onto what's happening in China, I do think, at least from analyst estimates, we are not looking at a dying company. In fact, there are constantly growing users. The numbers show, but it's just that it doesn't translate to like profits yet as of now. So yeah, that's just my
Sorry, I got one more question to follow on, right? Do you see the news on the protests in China? I think, was it in Guangzhou or something?
Yeah, I did.
Is that also fake news, or is that right?
I think that's real.
That's real.
I think that's real. So also previously, I think a few months back, there was this bank run thing in Henan, in some of the local province. Those are all real news. But it's just that it's slightly taken out of context. So I mean, this is not a China video, but long story short, they are kind of making a mountain out of a molehill, from my understanding. So yeah, but those occurrences did happen and it's real. So yeah.
Okay.
The Guangzhou one, right? I reached out to my friend in Guangzhou, just asked what's the situations, right? So she shared with me, currently they are not allowed to go to office. So there are some sort of lockdown there, but interestingly, they can walk around, buy groceries. That means personal travel around is fine. So it's not like a big disruption. But on that video that we are seeing on the internet, right? I think that one is just some mob behavior, some small group of people. So it's not like a big scale kind of demonstrations. So yeah, just like what Chicken said, you need to take into the context. Sometimes, when people are sharing on the internet, they might be taking just a snapshot and then just make their own story out of it, right? And it's very hard for us, people from the outside, to make sense of things on the ground.
Just nice, we can pivot over to Nvidia. So Bunti, do you have any rough thoughts on Nvidia? Not flaming the company, by the way, just now. Yeah.
Similar to my comment, haven't read into the details, just some highlight. They send out all these, if you go to their investor relations website, right, you can download the slides, so you don't have to go through the transcript, read those long paragraph, right? Just look at a couple of table and you can get some high level understanding. So my take is, let's say if you compare current quarter versus the previous, right? I think their gaming business is bad. It's dropped quite a lot compared to the previous couple of quarters. That one we know why, right? It's because of all this crypto and now no more demands on the crypto side. I heard that the GPU people selling on the secondhand market is like a fractions of the price. So I think that hit their demand quite a fair bit on the gaming GPU cards. But on the data center, it's doing very well. It's still growing sequentially, meaning that just compare quarter to quarter, it's still growing. So I think that one alone is good enough to calm the investor down, because for investors who invest in Nvidia, right, we are not going to invest it just because of their gaming card giving us good returns. Because you look at the PE is so high, right? People actually invest in this company because the work that they have done on the AI side, on data centers, the future that they are going to capture. If you believe that the future is all about artificial intelligence, machine learning, this is the future, right? Then I think Nvidia is the most direct way to get exposure to this entire space. That they are doing a lot of works in those areas. So I think mainly these are the two. The others are, I think, not so good. So if you want to summarize, I would say the earnings is not fantastic. But at least some relief if you look at the data center, because if that sector's drop, right, or showing huge drop in revenues, right, I think the companies, there's a lot of room for them to fall, given they started out from a very high valuations.
I wanted to, because I roughly did look into Nvidia's report. I was just breezing through, so it wasn't a very deep dive. Because I basically control F the keyword China, because I'm very interested in what's their development there over in China. So I think I did highlight one part where they said that this is management's commentary. So gross margin actually reflected 702 million in inventory charges, largely related to lower data center demand in China, approximately offset by a warranty benefit of 70 million. So I think the larger aspect is, I also wanted to cross-reference to, because I'm also interested in the cloud industry and the data center industry in China. And you can see that initially when Tencent released their result, they actually they will talk about Tencent Cloud in one way or one form. But then in this recent quarter, there was zero numbers. So I projecting that they actually have some very ugly numbers there. That's why they totally remove it from the report. Then for Alibaba, they grow 4% year on year, which is quite lousy also, to be very honest. Then now when I cross-reference to Nvidia, do you think this data center demand or this space in China will be a big driver for Nvidia, or do you think it's just a fun stuff at the side that if have then basically like a call option?
I think for data center on China geography, right, I think this one for sure there will be impact given the restriction imposed by the US government, right? So they say, okay, if it is advanced chips, now from certain period, certain time onwards, you cannot sell to China anymore. I think if you look at the short-term result, probably it is positive, because some companies in China, if they need the chips, they will just stockpile it for their future use, right? But if you just look, let's say 1 or 2 years beyond, right, it will be bad, meaning that some companies in China, even they want to buy the chip, they are no longer able to do so anymore. So I think if you look at the data center, I think still need to count on the business outside of China. Shall we talk about Buffett buying TSMC? I think this news, I guess among four of us, I'm the one that's most excited about, because I didn't see this coming, because when I study TSMC, right, I always thought that this business, it is good business, as in the gross margin is high, the net margin is high. But if you understand that cash flow isn't that fantastic, because they keep on need to reinvest into their business, build new fabs, and the fabs equipments, right, is very, very expensive. So if you just purely look at it from a free cash flow perspective, it is not as fantastic as implied by their earnings and their margins. So I think if I try to look at companies from Buffett's view, right, I don't think it will attract him. But when this news came out, say that Berkshire bought like, I think 4.2 billion stake in TSMC, I was a bit surprised. My initial guess was like, okay, this must be the, one of the two lieutenants that's helping Buffett managing their business. But then when I look at the amount, 4.2 billion, this is quite big one, because I think each of them might be managing about 20 billion US dollars. So if you invest 20, like if you are managing 20 billions and suddenly you just pour 4 billions into one single company that you haven't invested before, right? So that one sounds a bit too big in my opinion. So I think this trigger, right, probably was pulled by Buffett himself. So right after that news, I bought a little bit more into TSMC just to hedge myself against like
FOMO, right?
Yeah, coming. It's not FOMO. I'm just worried that when Buffett start buying, right, he could be like, keep buying in the next coming quarters. And if that's the case, it will be very hard for us to buy it at, the cheaper level, close to the 52 weeks low level, like below, let's say, $75. I think that's my concern. That's why I bought a little bit more. So yeah, that's the news. I want to like hear from three of you, like, are you guys monitoring all these super investor, like, Buffett or Bill Ackman or anyone, right? And do you actually like influenced by them when it comes to your own investment?
I guess for TSMC, he bought it because he feel that it's a value stock right now, right? I just checked the PE ratio is 14 now, after that 25% jump in stock price. So it feels like a no-brainer to him lah. Like it's a good company, it's stable. Like why not just buy it at the bottom? There are more and more value companies showing up already lah, since he has started to pull the trigger already, right?
I think Buffett's balance sheet, there's still tons of cash in there. He has been buying constantly, but sometimes he also sell. So if you look at his trades, right, they are buy, they are sell. So it's not like just keep on buying that kind, but still a lot of cash lah. But if you talk about like low PE, right? So for example, right, if you do a screener and you screen based on PE, for example, right? Actually, there are quite a number of companies that's trading even cheaper than, let's say, TSMC, right? But why these companies, right? So actually, before he trigger, it's not just looking at PE alone. There are a lot of like criteria that he will work behind his mind, and then he will look at it on a qualitative basis also. Because once he bought, right, usually he don't trade that much one. For example, Apple, he bought it for like a couple of years back, and then he has been accumulating, but like he seldom sell the stakes one. So that's why he's quite careful when it comes to buying a huge stake. Yeah.
Okay, I got a couple of questions, right? Any one of you can answer. Do you all know of an app, right, that tracks the cash hot of Berkshire Hathaway? Like how much cash they have quarter to quarter. Like if it's on a decreasing trend, right, then will be like what Kelvin say, means that he's deploying his cash meaningfully and not buying and selling. But if it's like stagnating, then we can sort of conclude that he's just reallocating, redeploying, that kind of thing. And the second question I have is regarding Warren Buffett's methodology, right? He doesn't like to invest into business. As far as I know, they have a high capex. And I think Bunty said earlier about this TSMC, right? They need to constantly reinvest to make their chips like thinner or smaller and all those kind of things. So the equipment, right, is not something that the counterparts in US can easily, or even in South Korea, right? They don't really have such advanced technology. So they will rather ask the TSMC to manufacture. So yeah, so back to Warren Buffett, right? Why would he invest in something that has such a high and the capex? What's the rationale?
I don't think there's a specific. So for the first question, I don't think there's a specific app, but there are quite diligent people keeping track of Buffett's cash pile. So I think as of now, from its peak, it's around 140 something B. Now it's around 110 B. So that's actually still a very huge cash pile. So if you just less off around the 30 to 40 B he needs for the insurance business, he still have a good 60 billion that he can buy. And that's like, I don't know, 2 times of C's market cap. But I think that's it. Back to the second question, I also do agree, because if you really study Buffett's mindset, he likes this kind of strong brand recognition, don't need high level of investment, and then can keep printing cash flow for the foreseeable future. And by foreseeable, probably like 10, 15 years or 10, 20 years. So from this perspective, I think this TSMC, disclaimer, I'm a TSMC shareholder also, but very small exposure. For TSMC specifically, I mean, I make the assessment that I'm guessing, I'm speculating here that he thinks that they are kind of at the end of that innovation frontier. So how far can you go? So 3 nanometer, 1 nanometer, then 0.5, 0.25. I don't know how far they can bring this part. And in terms of printing free cash flow, it's quite, they actually print quite a lot of free cash flow. And I think it's at a 50% margin, if I'm not wrong. Bunti, correct me if I'm wrong, but I'm pulling numbers out from my head. So from that perspective, if the capex is not expected to keep ballooning, and it's already matured to an extent where now it's a duopoly, so Samsung and TSMC basically monopolize the industry, then I don't think it will be cutthroat, unless Intel suddenly takes over. But I don't think so. At least for now, I think at least my own research tells me that still very far. So from that perspective, I think that's why this buy in TSMC is not very, very extraordinary, because it kind of fits into the principle, but it's a little bit weird. I do agree to that. Yeah, I think passing the time back to Bunti.
Nothing much to add. Yeah, I think for the cash pile for Berkshire, right? I think the easiest way is just to Google it. So you Google it, you come up with good, nice chart. So I think that's my way of researching. Google is my assistant. Then on the earnings one, what you mentioned just now actually is the earnings. So earnings, you haven't deduct all the capital expenditures when it comes to buying all this equipment. So if you just look at earnings itself, it's really, really high earnings, but you look at cash flow, you have to deduct the investment, right? Which is it will be lower. So it's not as high as the earnings. But one good thing about TSMC is that used to be, right, they every 2 years they upgrade one node, then they move to a more advanced manufacturing, right? And that one requires a lot of monies. And this investment has become bigger and bigger. And I think they slow it down already to every 3 years they upgrade one notch, for example, like from 5 nanometer to 3 nanometers. So I think that helped them with the monetizations, because same equipment. And then basically you just stretch it for another year and slow down a bit, but that's good from cash flow perspective. Yeah.
Chicken, I want to ask you, right? Like maybe this is not related to like TSMC or whatever. When you're researching like China news and trends and whatever, right? Do you depend solely on Google?
I use Douyin, Weibo, etc., and a community of people that feeds me info. So that's the good thing about building an online community. I don't even need to find, like my phone notification won't say, oh, you got see this video or whatever, then I'll go and do a further investigation. Yeah.
It's just wondering, because Google, I think, got a lot of China things are not actually on there.
I follow a few propagandas also. So basically the China side of, like, they perpetuate a lot of propaganda stuff also. So to kind of see how they spin this whole zero COVID thing as well, to see what's the sentiments as well. Yeah.
Okay. Got it. Crypto.
I think recently also there is that after this FTX collapsing, there are more and more news coming out, and I think there's a full-fledged investigation going onto FTX. So we'll probably not comment much about it. But I think Gemini recently also has some problems. Maybe I think Kelvin is quite in tune into space. You want to like talk to us briefly about it?
Okay. So Gemini has this Gemini Earn program, where they give you insane, not really insane a bit of yield 5 to 8%. That's not insane compared to Anchor's 20%. So anyway, the Gemini Earn, the partner is called Genesis. Genesis hotted withdrawals. So it's not Gemini hotting withdrawals, it's Genesis hotting withdrawals, which is Gemini Earns program. So I think if you have crypto in Gemini Earn right now, you can't really withdraw back out to Gemini. I might be wrong. I don't have anything in there, so I can't check. The reason this happened was because they were exposed to the whole not FTS, the Three Arrows Capital bankruptcy lah. Though I'm not, then I suspect it only happened now is because of everyone trying to pull out their cryptos from all these lending platforms lah. So Gemini Earn is the next to go. It seems like crypto.com is safe for now, but I don't know. So people are losing trust in all these lending programs lah. So you will see more of these platforms collapsing soon. No?
Actually, I was quite interested in this idea where, so now centralized exchange are one by one collapsing, and I think they are currently investigating FTX, and it's basically a very interesting black hole in there. And now I think recently I just saw Chicken Genius, he tweeted out that when there is fear, he wants to go in because that's a contrarian in nature. Because when I mean the classic quote is when others are greedy, you are fearful, and when others are fearful, you are greedy, right? I also wanted to understand, like, from this perspective, are you guys like going all into Bitcoin or Ethereum or whatnot? Because it seems like Chicken Genius is giving the buy signal that, hey, the big ones out there are probably like Bitcoin, mainly Bitcoin and Ethereum is gonna hold their price. So I just want to throw out there and to understand whether are you guys like buying any crypto? Are y'all dollar cost averaging, doubling down, etc., or what have y'all been making do of this situation?
I've been buying all the safer stocks lah. Okay, the reason is because my portfolio is risky as hell right now. Like 80% Tesla is not safe for me lah. I know for some people they find it very safe lah. Huh? But for me, I just want to de-risk it a bit because I don't see the point exposing myself to such a high concentration risk anymore. So recently, like Chicken Genius, he's bearish on Tesla. Not just macroeconomic stuff. I believe the other reason he's worried now is because of political risk, which I suspect has something to do with China and Elon Musk lah. So that's something I'm trying to de-risk myself. So with such a high risk portfolio, I won't be touching crypto for now lor. What about the rest?
For me, my cryptos are safe in my cold wallet because it's not on the internet, right? So nobody can hack it, nobody can freeze it. But I'm not buying more also, despite the fact that it looks very cheap now, right? Like Ethereum, it's like 1,001, 1,002. Yeah, Bitcoin is like what, 16,000? It's very, very cheap. A lot lower than my average, but I'm not buying because like I don't feel that the space is very safe now lah. Yeah.
I have a question. Do you only own Bitcoin and Ethereum?
Yes, only
Okay.
Bitcoin and Ethereum.
So since Ethereum has changed to proof of stake right now, are you staking your Ethereum?
No, because they are in my cold wallet.
No, actually you can do that. So I went to check, right? Ethereum, you can use something called Rocket Pool. You stake it, they give you their own version lah, Rocket ETH or something like I forgot the actual name. Another crypto in return. So it's a 1-to-1. They claim like it's back 1-to-1 thing. It's the whole anchor thing all again.
I don't want all this 1-to-1 thing.
Sus, very sus.
Every time they say, oh, it's back 1-to-1, 1-to-1. Then after that you say, yeah lah, the thing is 1-to-1, but the thing is worth 0 now. So it's like,
no, that is different. Like, okay, so obviously anchor is collapse. It was caused by Luna, right? So Luna, they are sort of printing money for it. So for this one, I haven't really checked, so I dare not mention it yet.
don't do it.
I want 1-for-1 though. I don't want 1-to-1. I want additional to give me more money for my money. But back to Bunti though, are you investing in crypto? Are you buying in and stuff?
Yeah, in the past I bought into Bitcoin, Ethereum, some Dogecoin and Cardano, very small positions, and I just store it in my cold wallet. I have not been buying for quite a number of months already. And right now, right, because of all these like hot withdrawal and so on, sometimes putting money into the exchange to buy, I also kind of like worried, will it be like the moment I put it in, then hot withdrawal, then gone, money is gone, right? So I think there's some concern on that. Back to, I think, like the strong crypto, right? Say for example Bitcoin or Ethereum, I don't think they will go away in the sense of like Bitcoin. If you look at their base layer, it will still be there. It will be there very, very long time. The problem, the weakest point, is always at the exchange, which is the centralized party. And if you look at, like, come back to the FTX saga, right? The custody, they are acting on like a custodian for us. We buy something, as long as you put there, the money should be there, and they shouldn't touch that money, right? It should be back one for one in their own wallet. And if even with that, suddenly the company can just disappear, I think there's a lot of like trust issue on all these crypto related topics. I think, let's say talking about from now till next 6 months, right? I think there will be more people liquidating rather than buying, because people no longer trust this entire ecosystem and anything to do with crypto. You see, just now we just mentioned about these rocket things already. We kind of like, wow, very, doesn't believe that this is good things, right? But if you just go back 1 year ago, I think everyone is just like, oh, good stuff. We just go, just put money in, right? So, this kind of sentiment is not just among us. I think it's like really among the general public as well. So just be careful, whoever putting money into crypto.
But that's a good indicator, right? If I want to be a contrarian, means that all of you are scared. Basically, like when China really on the brink of invading, everybody say the China stocks cannot buy or uninvestable, then that's like a good indicator that we are kind of forming a bottom, right?
I don't think so, because, for example, if something is solid and then just because of fear it come down, I think there's good chance it will bounce back. Okay, that one, let's say we're talking about business, right, or stocks. But for crypto, I think a lot of their value actually based on the the communities and the trust on the entire ecosystem. So without that trust, right, it's a bit like you holding banana currency. No one want to accept it. No more. Like people don't think this one worth money, and then the real value will become zero. Even for Bitcoin, the base layer can work as if per normal, but the value that people assign to it can go down and down and down for a very long period of time. It's not everything will go up once. So just be careful on that now. Yeah.
So do you believe that it will go down?
Yes, I think for the next 6 months, I'm not that hopeful for the entire crypto space, just because of all these, people lost money and then lost their trust and then just want to get out. I think this one will keep on for at least some time now, talking about, let's say, another 6 months or even 12 months, right? Yeah.
I think thanks for the crypto discussion, because I'm not very in tune with it. I think fundamentally to me, I'm not really a very big believer of the space, so that's why I haven't been invested, and probably I'm too dumb to understand. So that's why I want to stay poor. But anyway, I think just to refresh our own macro like outlook, I think since last week, I think for the last 5 days rolling period, as the SPY is down 0.36%, the QQQ is up 0.76%. So it essentially stayed flat for the last week. I think it went up for a good 2 days, and then after it came back down again on Wednesday and Thursday. So just to refresh the outlook, I think from the last discussion, Eric was he thinks that this is we are kind of forming the bottom. Then me, Kelvin, and Bunti, we think that this is a bear market rally and we still have more room to go. By room, I mean going downwards. So I think from this perspective, I also wanted to understand your take. Have any of your thesis changed? What do you look of the whole situation thus far in the markets? Maybe Eric want to start because he's the sole warrior here.
Sole warrior? What do you mean?
Because you think bottom already, what? So you can make your case.
Oh, okay. Okay, that you see the index never go down some more, right? Like, isn't it bottom? That's the definition of bottom, right? Like, unless you say the index go down some more, then I have to make my case. But yeah, so far I think my expectation is that there will be rallies that will rip the face off, and then followed by a slow grind down, and then there'll be violent rallies up, slow grind down. But overall, right, if you zoom out, look at the weekly or even monthly candles, right, you should start to see a bottoming process already. Yeah, I don't expect it to like crash another 30-40%. I think at most I give it like maybe 5%. Yeah,
But-
because yeah.
But I wanted to take your thoughts, right? I think the previous discussion, we also talked about this idea of a Fed pivot. So when the Fed pivots, they start decreasing interest rate because interest rate is like gravity to valuations, right? So then there was this very interesting tweet that I saw recently, I think I shared in the group as well, saying that even after the Fed pivots, there is still a lagging period where the market will continue tanking. And only after that, a good 3-6 months or 3 quarters, then it will start rising. So I wanted to know your thoughts on that though. If now the Fed is not even pivoting, the Fed is still increasing rates, and then we are still hopeful that the stock market will recover. I think how do you reconcile that view?
That's why I say it's bottoming. Like it's a English thing, right? It's a verb,
Okay, so-
right? Something like
so-
that, like ongoing.
Right. So that perspective is we will be trading in that 5% band. So if
Yeah.
it breaks from, so let's say now SPY is what? 394. 394 times 0.095. So if SPY breaks below 375, the argument is moot lah.
Yeah,
Right.
means
Okay,
that I need to make another prediction, right?
Okay, understood. Correct. So maybe then I'll change over to Kelvin. Do you still think this is a bear market rally, and your perspective of the ongoing thing that's going on, like all the tech layoffs and whatever?
Yeah. So whenever just now you mentioned now, so when the Fed pivots, right, the stock tend to crash after the pivot because that's their intention, they want to slow down the economy, and the effect of that is recession and the market crashing. So historically, after the Fed pivots, there'll be around a negative 30% drop lah. For the period on average, it will be it's around 14 months lah. So that's the first data I want to point out. And the second data is unemployment rate right now is still very low. So I don't know, even after all these layoffs, right, people are still able to find jobs. So that sort of gives confidence to the Fed that they should continue raising rates lah. Maybe not as fast because inflation rate has been slowing down, but they will still be raising until at least it matches the inflation rate, at least 6%. That's my theory lah. So, okay, then this is the third one. If you see the chart, it's still in a descending channel lah. So
I didn't know you were a technical trader though, but okay.
That's how I pretend, like how you pretend masa. I pretend I'm a trader guy. So unless we break out of this, the upper part of the channel, I don't see any chance that we'll start turning around lah. And in fact, we are right now. It feels like it's turning back downwards again, right? So yeah, unless there's good news, like Fed is stopping, not slowing down, like stopping. I don't see any chance that the market will start going up low. So that's my take.
Actually, on whether bottoming or not, I think I'm towards agreeing with Kelvin. I think not so soon because of rate hikes still continue and so on. But there's one thing that is kind of like positive that I'm paying attention to, which is the layoff. So I think this is kind of like very I think not so good, right? Because people lose the job, and then I'm bullish on that, right? But if you think about it, the layoffs that at least US tech sector is experiencing now, meaning that all these companies, they will cut thousands of jobs, right? I think that will put them in better financial positions for the next year because lesser expenses means more money for the shareholders, right? So I think this phase, right, now we are just starting and then there will be adjustment throughout next year. And then I think this is like put us in good positions to really capture the opportunities, meaning that for companies that could be like overburning or overspend right now, it's time for them to become more disciplined, and usually this is like a good sign for the shareholders. Okay, so that's all from my side. Back to Chicken.
I think that's all for this week. I hope you guys enjoyed the discussion after all. And we do feel free to subscribe and help smash that like button. So we will commit to at least one episode per week on every Friday. So I'll see you in the next video. Have fun backholding, guys. Goodbye.
Bye.